This is Matthew Cratter from Trader University, and today I want to talk about different cryptocurrencies, altcoins, in particular a subcategory called utility tokens, and why I'm bearish on them. Now, Bitcoin maximalists, which I'm often accused of being, have a very bad reputation. We're often thought to be very narrow-minded or something like this, or very close-minded to new technologies. But I would suggest that there's actually a lot of thought that goes into this. So I wanted to talk a little bit more about utility tokens, which I think a lot of cryptocurrencies fall under this category, a lot of cryptocurrencies other than Bitcoin. So let's just rewind here and start with a thought experiment. Let's say it's payday, you're just about to get paid, and so you talk to your spouse and you say, okay, we just got paid, it's Friday, time to pay the rent, time to pay the electricity bill, time to stock up on some groceries, and also time to buy some Chuck E. Cheese tokens and some casino tokens. Now, the first three uses of the payday money are very clear, but no one obviously stocks up on these kind of tokens at payday time. For those of you who don't know what Chuck E. Cheese tokens are, they used to have them at these kids' restaurants where you could use them to play various games and video games. They've since eliminated them, which ironically, by eliminating them and moving to cards, stored value cards, has created a certain scarcity surrounding these tokens. And so now they actually trade with some value because of their scarcity. So here's a 1992 Chuck E. Cheese game token. You used to be able to buy one of these probably for, I can't remember what they cost back then, maybe a quarter or a dime or something like this. They're very, very cheap. Maybe one of you remembers this. So these are what are called utility tokens. Another example of a utility token would be casino chips, casino tokens, whatever you want to call them. Now, no one stockpiles utility tokens in the real world. So if you're going to go to Chuck E. Cheese, if your kids are going to have a birthday party there, for example, and this is the old days when they still had tokens, you would buy just enough for the visit. You would not stockpile them ahead of time. You would just go there, exchange some of your fiat dollars for tokens, let your kids use them. And then if you had any left over, I can't remember if you could exchange them back for US dollars or you had to keep them, but this was one of the games that parents used to always do, is try to buy just as few as possible, because you don't want to end up having to take these tokens home and then put them in a drawer and remember to bring them the next time. They're not a very good store of value. And who knows, if Chuck E. Cheese ever went out of business, then you'd be out of luck for these tokens. And again, they would only have sort of scarcity value if the tokens were discontinued as they were, or if the business filed for bankruptcy. So when you're done with any kind of utility token, whether it's the casino or a restaurant or an amusement park or something like this, you always convert your leftover tokens, if possible, back into your fiat currency, whether it's US dollars or euros or yen or Australian dollars. Just wanted to quickly mention, if you're finding this video helpful, be sure to hit that subscribe and like button. So now let's talk about utility tokens in a blockchain environment, in a cryptocurrency environment. Tokens often are used to pay for the computing power on the blockchain, on the network. The blockchain is obviously maintained in most cases by miners, obviously using either a proof of stake or proof of work. And these miners are compensated with the cryptocurrency, with these tokens. They're either paid with existing tokens. Maybe if you want to do a transaction, you pay some gas, ETH gas for a transaction, or to tap into the computing power. Or miners are often paid in newly minted tokens. This is what happens with Bitcoin. Every time a new block is mined, the miner who wins that contest is rewarded with 6.25 new Bitcoin. Now, issuing new tokens, a problem with this is it dilutes the existing token holders or cryptocurrency holders. Obviously, Bitcoin, the amount of newly issued tokens or coins is falling over time. It gets halved every 210,000 blocks or every 4 years. Let's talk about some other utility token networks. VeChain is an example people often mention. It's a blockchain used for supply chain management. All of these things, I can't remember if VeChain is a public blockchain, but I'm talking here mostly about public blockchains where the software is transparent and where anyone can come in and copy it. This is what a public blockchain means. For example, the Bitcoin software is open. It's completely transparent. You can download a copy. You can also download a copy and do what's called a hard fork, where you change the software slightly and then you start running it. And the trick is to get a lot of other people to run it with you. This is easier said than done. It's easier to do with a utility token network than it is with a store value network like Bitcoin. But it's important to realize that there's not the same when you have a public open source piece of software. You don't have the same intellectual property protections that something like Facebook has. For example, you could fork Facebook and run it, but you might end up getting sued because they do have various copyrights and intellectual property claims on their software. Again, the Facebook software is not open source for anyone to download and use either, and you're certainly not allowed to copy it. So this is the weird thing about utility blockchains, is that anyone can come in, slightly tweak the software, and run it on their own. So let's say that we have an original blockchain network, some original utility token network that does some perform some calculation. It does something. Maybe it tracks COVID vaccines or tracks supply chains, etc. So it does something that's economically useful that people want to pay for. And let's say that this original cryptocurrency or utility token network is doing this at a small economic surplus. So there is some extra money that's being made above and beyond the cost of the equipment and the electricity, the cost that is borne by the miners to do the mining and secure the blockchain. So if the original utility token network is charging a small profit, you can always come in and you can copy the software, you can fork the blockchain, and you can offer the same service for half the price and undercut everyone. This is what happens in capitalism, obviously. You can open up a tire store or an art supply store and you can offer lower prices. And there's kind of a drive, there's a race to the bottom in terms of profit margins. And the only way to really win is to have very large scale, like a Walmart or an Amazon or something like this. And it's even more difficult when the cost of forking the blockchain is basically free. So if you fork the blockchain and offer the same computing service at a lower price, someone else can come in and fork it again and undercut your price. And so what eventually happens is that the value of the utility tokens, or the value of the computing network of the blockchain, or the blockchain network, will converge to the cost of running the network. This is because it's very easy to switch out. If you can save money by buying your paper supplies from one supplier versus another supplier, you'll switch. And it's even easier when it's all online. You can just exchange your tokens from the one network, you exchange them for US dollars, and then buy tokens on the new network. And so you don't have the same moat. The switching costs, as we would say, are very low. And as a result, if you have a utility token network, what's going to happen over time is you'll have competition come in, and the competition will eventually drive the profit margins close to zero. In addition, network costs, the cost of running this computer network, will also continue to fall over time because of Moore's law and the falling computational costs as semiconductors become cheaper, etc. This is what's happened. Obviously, your desktop or laptop right now may cost the same as it cost 20 years ago, but it's much, much more powerful. And so the cost of the computing power has fallen over time. So this makes it very difficult for any sort of economic surplus to accrue to the token network, and such to accrue to the holders or hodlers or investors in that token. Bitcoin is different though. So as we said, no one hodls utility tokens any more than someone hodls Chuck E. Cheese tokens or casino tokens. These are really just a cost of doing business. It's like holding utility tokens is like holding inventories. You want to hold as little as possible. So people don't hodl utility tokens, even in real life, back with Chuck E. Cheese tokens or casino tokens, but they do hodl things like gold real estate, and increasingly Bitcoin. No one hodls a utility token like gasoline. You basically buy as little as you need, assuming that there are not going to be these massive shortages or something like that. But during normal times, you don't stockpile it in your backyard unless you're a survivalist or something like this, but you buy as little as possible. Likewise, corporations, companies try to keep their inventories as low as possible, simply because if you carry a lot of inventory, it's expensive to store it, to finance it, etc. And keeping too much in inventories lowers your return on capital. Basically, your profits divided by what you need to generate those profits. And hence the rise of just-in-time inventories, where, for example, Dell Computer was one of the early companies to do this, where you'd order your Dell computer, and then they would start building it after you ordered it. So they'd actually have a positive working capital, and they wouldn't order any of the raw materials until they had your money in hand and you'd prepay for your computers. So companies, just like households, try to keep their inventories as low as possible. No one stocks up on 100 cans of shaving cream or 1,000 bars of soap. Maybe you stock up a little bit when there's a sale, but you don't want to tie up your wealth in things like this, or in cans of soup. Obviously, it's good to have a little food, especially if you're a survivalist, but these are things you try to minimize. There's not a lot of happiness that's generated by having 1,000 cans of shaving cream. If there's going to be a COVID pandemic, it's great to have some backup toilet paper, some backup shaving cream, etc. But people prefer to store their wealth, for example, in US dollars, and then when they need some shaving cream, they just buy 1 or 2 cans. So this is the difference. Utility tokens are more like inventory or working capital rather than a store of value. Companies will try to minimize their inventory, but they'll try to maximize what they store value in. So, for example, their investment portfolio. Apple has a gigantic investment portfolio. It has a lot of cash as well, which they store in money market assets. They store it in treasuries. They may store it in index funds or something like that. As we've seen with MicroStrategy and Square and Tesla, companies are increasingly moving some of their fixed income or cash positions into Bitcoin to try to protect it against the ravages of inflation and central bank money printing, which basically generates more tokens and decreases the value of each existing token, each existing US dollar. Gold, real estate, stocks, Bitcoin, things like this, scarce assets like Picasso paintings or rare cars that actually appreciate, that don't depreciate. These are different. Smart people and wealthy people, or people who want to become wealthy, try to collect as many of these assets as they can. The only reason you want to collect a lot of utility tokens is if the supply no longer, if it's a scarce asset. So if it's no longer used. When Chuck E. Cheese was still accepting game tokens, there's basically an infinite supply of it. They could always create more as you gave them your fiat dollars. So there's no reason to hodl game tokens back then. Now there is perhaps a small reason to do it. I don't think it's a great investment, but it does make some more sense. So Bitcoin is in a different category. This is what we've seen. We've seen increasingly, we can see the red bars down here. This is people, corporations, institutional investors, billionaires, companies like Tesla, buying Bitcoin, taking it off the exchanges. That's why these are red. This is the supply chain on the exchanges, and buying Bitcoin, moving it into cold storage. And so the way corporations have been behaving is they're trying to maximize their inventories of Bitcoin. At the same time, they minimize their inventories of raw goods and utility tokens, etc. A company's never going to try to buy electricity tokens to pay for the next 10 years. They'll only buy as much electricity as they need. Maybe they'll do some future hedging, etc. But this is the difference between a utility token and a store of value token. To conclude, it's very difficult for economic value to accrue to a utility token network, simply because someone can always come in and fork the software, fork the network, and offer the same computing service at a lower price. This drives the marginal additional revenue to the marginal cost, and means that value does not accrue over long periods of time to the network itself or to the utility token holders, i.e. altcoin holders, cryptocurrency holders. What this means is that it's very hard to make money buying and holding altcoins other than Bitcoin. You can trade them as momentum assets. A lot of them have been trending up, moving up with Bitcoin, some of them moving up much more percentage-wise than Bitcoin. Trading them is one thing, but if you're going to buy and hold them as a long-term investment, you're going to find that many of them, in fact most of them, and maybe all of them except Bitcoin, are mean reverting. And they behave as you would expect utility tokens to do. They may run up, and then the price falls back down because there's no real incentive to hodl them or hold them for long-term investment. Stores of value tokens like Bitcoin are a completely different game. And we can see over the past 11 years that the most value in the cryptocurrency space has accrued to the tokens inside the Bitcoin network. These tokens are obviously called Bitcoin as well. This is kind of weird that the network is called Bitcoin and the tokens as well are called Bitcoin. Bitcoin has the largest market cap of any cryptocurrency. And this is one reason I always laugh when people call me a Bitcoin maximalist, because the market right now is a Bitcoin maximalist. It's valuing Bitcoin at the largest market cap by an order of magnitude, certainly over most of them, and even over something like Ethereum. Billionaires, corporations, hedge funds, other institutional investors are treating Bitcoin like a store of value asset. It's not really a utility token. It is very nice to be able to send the money anywhere you want in the world in a non-censorable, non-confiscatable manner. But the primary narrative that's emerged for Bitcoin is this store of value narrative, digital gold. It's like gold, but it's better than gold. It's more divisible, it's easier to transport and store, and it's truly scarce, unlike gold. And it's verifiably scarce. It's very difficult. No one knows how much gold is in the world, but we know the true supply of Bitcoin. And that supply, it's a little more than 18 million right now. It will peak at 21 million. So it's really absolute scarcity as determined by the code. You could fork Bitcoin and create a new network that had more tokens, but no one would ever go over to that because it would dilute their existing. There's a real incentive for current hodlers not to dilute their holdings, and so they would never migrate to a network where there were 25 million Bitcoin, for example. We've seen this even with forks of Bitcoin that maintain the 21 million cap, things like Bcash, Bitcoin Cash, BSV. These are failed forks of Bitcoin, and we know they're failed not because I'm just prejudiced against them, but because we can look at their comparable market caps, and they're just a tiny percentage of BTC, which has been the winning branch in the Bitcoin race. So you can fork a utility network. We know that this works, but you can't fork a store of value. We've never seen anyone successfully fork Bitcoin. And so I would suggest that this is one reason that a lot of people are Bitcoin maximalists. This is a term that was coined by Vitalik Buterin, who of course did a big pre-mine of his own cryptocurrency, awarded himself a lot of it, and cashed out. And he created this as a critique of people who are in more of a Bitcoin-only mode. And people call them Bitcoin maxis, etc. And there's various connotations associated with that. But I would suggest that people are Bitcoin maximalists, not because they're especially stupid or stubborn, but I think a lot of people understand either explicitly or intuitively what I'm talking about here. They're just skeptical, as I am, that value can accrue to a utility token network over a long period of time. Some people think they can trade altcoins and use this to accumulate more Bitcoins. I've really never seen anyone who's done this successfully. It makes it very difficult because you have to pay taxes whenever you take profits. And so I'd suggest, I've made other videos about this as well, that you can search for, but it's very difficult. If you want to end up with Bitcoin, you should buy Bitcoin. You shouldn't be trading altcoins and then trying to be very smart and convert them to Bitcoin at the right time. This is a very difficult game to play, especially when you have this mean reverting nature of utility token networks working against you. You might get a big spike in VeChain, for example. How are you going to know when to get out? And in the meantime, will Bitcoin have moved up? Will you have enough with your profits after taxes to move from VeChain into Bitcoin? It's easier said than done. And so There's no reason to hodl a store. There's no reason to hodl a utility token, but there is a big reason to hodl something that appears to be an emerging store of value token, as Bitcoin is. As I've said many times, store of value is a winner-take-all category. It's the biggest category. And what this means is that not only do people store the current fruits of their labor in Bitcoin, but when you have someone in 100 years from now who invents some cure for some disease and becomes a billionaire, it's very likely that he or she, if Bitcoin's still around, will store some of their wealth in Bitcoin. So Bitcoin is an emerging store of value. Its volatility is going down over time. And its absolute scarcity and its ability not to be censored, especially in an era of rampant central bank money printing, gives it this particular value as a store of value token. And because it already appears that Bitcoin is taking market share from gold, we've seen hedge funds and individuals sell their gold positions and move it into Bitcoin. I sold my gold royalty stocks and my Tesla stock and moved it into Bitcoin. Ironically, then Tesla ends up buying some Bitcoin. But store of value is the biggest category. People storing their wealth, if you think about it, the trillions and trillions of potential total addressable market here is much bigger than any utility token. And so Bitcoin, even at an $800 billion market cap, still seems very cheap. When we think of real estate as a store of value or stocks as a store of value, we're talking maybe $100 trillion each, which means that Bitcoin can still very easily go up, call it more than 100x from here. This means the future market cap of Bitcoin and the price per Bitcoin can get very, very large. This is one reason that a lot of smart people prefer to keep most of their cryptocurrency allocation into Bitcoin. Bitcoin right now is the only cryptocurrency that I own. If you found this video helpful, be sure to hit that subscribe and like button. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below. Thanks a lot for watching, and I'll see you in the next video.